Yo, what's going on, guys? Hope you've all had a really good week in the markets and smashed your trades. Now, what I'm going to do in this video is go through a trade utilizing lower time frame order flow, because I think a lot of people wait for one sort of entry or order block when really once price continues to push up, breaking structure, we can sort of use order flow to see multiple entries, because there's more times than not there's more than one entry. There's actually quite a few you can get. So we're going to go through a trade on GU. Now this is the 15-minute time frame. So if we look at this bit of price action here, we had a low and a lower high. We had a nice bullish move that broke structure. So that creates, this area down here. We have this last down move before the up move, but then, these two candles haven't really engulfed. But for me, I would be looking at this candle here, for price to come back into either taking entries from here or, dropping down to the lower time frames like the 1 minute or even the 5, and looking for entries once we get that confirmation. So now that price has come back into that area, I'm going to come down to the 1 minute time frame, and this is that area. So I haven't got it marked on, but that's the 15-minute push up that caused the breaker structure. Okay, so price is now trading within that. Now I have already gone through this, but I'm going to go through it with you lot and just show you the order flow we get to the upside. So this price action here, we have a low and a lower high. Okay, so what I would want to see is that push up, showing me that change in market structure above the high, and then to see if we can get a pushback into that area, and then we can see the move to the upside. So that would be the forecast. So let's just see what once we bring price forward a little bit. So we get, we wick this high here, but we haven't actually closed above until this next candle. But it's not really showing much progression, but it is still a break of this high. So we can mark that on as a break in structure. But for me, I would be waiting for a double boss. So a push down, another break, and then look for that. So let's run it forward. We push down. So if you was looking at an entry here, you may be looking at this inside bar or even down here, which you would have got tagged into, as you can see. Then we have a nice push. So we've got a double boss now, which is, stacking the confluence for more upside on this pair. So let's just zoom in. Okay, so breaker structure, pullback, mitigation, breaker structure. Last down move is here, but then we have a little candle that doesn't engulf that candle. So this is where I'll be looking to get involved. Okay, so once we had that breaking structure, my entry would be set at the top of that order block with a stop loss. For me, I would account for this wick. So you can see I've put it on that wick, 3.2 pips. It doesn't make sense for me to have a 1.4 pip stop loss, just from my own testing really. Okay, so one more candle pushes up. Then we start to retrace, refilling any imbalance that was also left as well. Okay, and then we tap in. So we tap in, come into the EQ, or just falling short of it. We tap in again, we mitigate the majority of this candle here, and then we push lower, and then we start to see that momentum kick in. Now we haven't quite broken this structure yet, but if I was in this trade, how would I be managing this? Well, I want to see a break in structure first. We haven't broken above and closed. We just wicked it. So now we've broken structure, okay? So I'm going to mark that on. Break a structure, okay? Now would I move to break even here? Well, not really, because it's still possible. Well, that's a thick line. It's still possible that we could come back to mitigate this move here before continuing. So I'm just going to wait a little bit and see if we can actually get a push off. Okay, and we're ranging. And then we do break structure. So at this point I would be at break even, just above. Just like that. Okay, so risk free on the trade, right? Now what do we have next? Well, we've broken structure again. Okay, so if we wasn't, you know, in this trade here, then we could be looking at this, you know, last down move before the price that caused this structure to break. Okay, I'm not going to put on my trade, but I'm just going to show you. We come down to mitigate and we don't come below it. Okay, so you know, this is I'm going to put it on. This is another entry. You could be entering here with 2.5 stop loss just below this wick, and then this would be your first trade if you wasn't in the trade from down here or this one. Okay, but I'm going to take it off because I don't want to overlay the chart with too much, you know, drawings. Okay, let's keep going. Break a structure, wicked it, and then we closed above. Okay, so do we have another area? Well, we have this inside bar which price could come down to before continuing up. But let's see. Okay, so we don't quite come to the inside bar. So if you had an entry set, then you wouldn't have been filled. But going back to this first trade, what I would be doing is, you know, managing under these lows, because we are seeing order flow now. So what that means is we're basically breaking structure, mitigating, and continuing. You know, it's showing intent in the market. Due to that reason, I would be sort of managing under these lows with this trade here. So, you know, locking in more profit as we break structure, because the anticipation of this sort of price chart is we're going to keep producing higher highs and higher lows, and, you know, not break below these areas. Okay, once we do that, the order flow is pretty much, you know, it could be changing. Okay, so let's keep going. We break structure again. Okay, so let's put it on. Breaking structure. What does that leave? Okay, well, let's look at the last down move. And then the move after is where price broke structure. Okay, so these are all order blocks, you know, 1 minute order blocks. So again, we can set an entry. I'm not sure if this is going to play out, but, you know, I'm just going with the order flow. 2 pip stop loss. And do we come back? Nope. We do push off. Now at this point, is it valid to keep this entry on or take it off? Well, for me, it's valid because we haven't pulled back. Essentially, we had this inside bob, but we haven't pulled back and broke structure until, okay, so at this point we have sort of pulled back, broken structure, so we can take it off and see if we can get another sort of pullback and entry. Okay, so we kind of have one here. We break structure, but it wouldn't be one that I'll be looking at because we wicked it and it's just sort of, you know, corrective. It doesn't really show much intent until here. So you can see the difference with this price action. We've impulsively broken. So we've broken, let's just go with this high here. I know we wicked it here, but you can see the break in structure. Okay, so again, I'm sure you know by now, but the last down move is here before the move that caused the break in structure. So, you know, these are all the entries. So if we look, we can class this one. So 1, 2, 3, 4. So 3 would have been tagged in, this one not, and then 5. So let's see if we get tagged in here. Stop loss, I would be accounting for this wick because it's really, this is the most recent higher low currently. Higher high, higher low. Okay, so we could wick down here before continuing. So the stop loss would be 2.5. And does price come back? Yep. Are we gonna get tagged out? I'm not sure. Ranging, and we break structure. So, you know, this is beautiful. Beautiful order flow to the upside. Breaking structure. Now, where would my stop loss be from this trade down here? Well, let's look at where the most recent higher low is. We've broken structure and we have this higher low here, but the lowest point from this sort of range and initiation out is here, this candle here. Okay, so that's where I'm going to place my stop loss because I don't want to really put it at this higher low here because we're seeing order flow. So the anticipation is for price to come down to fill and mitigate this move before the order flow continues. So I don't want to get tagged out. So I'm going to keep it at this low here, or, you know, a couple pips or 1 pip below. Let's go with there. Okay. So how much profit is that? 6.72, and we're on the 1 minute time frame. So what is that we got in here? 1 hour and 30 minutes. So, you know, brilliant. But let's continue. So again, breaking structure. Last down move is here. Now, I do recommend all of you to go and do this and back test it so you can see, you know, how you can implement it and sort of improve, because the more you do it, you'll pick up on little tweaks, 1% tweaks that you can just keep implementing and just ultimately get better as a trader. But yeah, let's keep going. Okay, so broken structure. Are we going to push down? That's the anticipation. Now, I don't like saying expectation. I know people say expectation or order flow, but I think once you start expecting something to happen, I think the opposite happens. And I think a few of you can probably agree with that. Once you expect price to move high, it moves low. Like, that's just trading. So I rather like to anticipate rather than expect, but you know, it's just my personal preference. So now we're ranging, building some liquidity at these lows, and we've got equal highs as well. So for me, this holds more weight for price to come down to this area to sort of grab liquidity before continuing, but we're going to find out in a minute. So we push down out of this range and we push up. So this is so typical. So we range, come down, take in sell side liquidity, and then right away we push up above the equal highs, as you can see. Now this looks like a nice flag pattern, doesn't it, to go long. Impulse up, which is the flagpole, the flag. People looking to get involved, I don't know, maybe on this retrace or the third touch, you know, whatever. We push down, push up. Now I'm not sure what happens next. We could push up from here, but we may push down. It's very likely, but let's see. Okay, so we are ranging and we are pushing down. So this shows me price, you know, stalling a little bit. As if we look at here, you know, we was clearly putting in that momentum with the higher highs and higher lows, mitigations. Now we're ranging, but we are still, you know, in a bullish order flow. So the anticipation is still long until we see otherwise. Okay, so we do push down, as I did think we would, and we have gone messy with price action. Okay, and look at what do you know? What have we got here? So this is just building liquidity. Okay, but look here. What's that? It's a mitigation of this order block. Okay, so you know, this is not random, it's happening for a reason. Building liquidity, grabbing liquidity, mitigation, continuation. Now do we push up from here? I don't know, but it's very likely. We are coming back down to fill this wick. But this is getting messy, but you can see, you know, if you would have set an entry, a riskier entry, you know, on that. I say riskier entry, but it's not really, because it's still breaking structure, you know, mitigation. But looking at 2 pip stop loss, you would have managed probably up here, but you know, this is where price is. Let's just play it forward, see what we get. Okay, we do then start to push down, and you know, we are seeing that change in market shift. And on the 15-minute time frame, you know, we had a lovely leg to the upside with a lot of opportunity. It won't always continue. We broke structure, and then we can see we got range bound price action. We wicked in. So if you took this entry here, you know, you wouldn't have lost money. And then we are now starting to break structure. So I thought I'd just do that video on order flow, just to show you about the opportunity that we do have, and you know, not to get FOMO, because there's always entries within entries that you can take. So let me know what you thought of this video, and yeah, I'll speak to you all in Discord. Thanks guys.